Welcome to Decentralized News, our weekly coverage of the major headlines in Bitcoin and the cryptocurrency space. I am your host, Piter, joined as always by my BDF Ozzy. You know what that means, Ozzy?
I have no clue what that means.
You're my best degen friend.
I love it. I love it.
All right, there's a lot to get to, so let's jump right in. Please do your own research. This is not financial advice. We are recording the day before Halloween. This is coming out on Halloween. An exciting Uptober is coming to a close. It's going to come to a close in dramatic fashion because on November 1st we have the Fed meeting. But what are we witnessing? Is this the start of the bull market, or was this just a bear market rally? We still have 3 months left in the pre-halving year, which is notoriously can be bad, and 6 months until the actual halving, and the real action tends to happen after the actual halving. So how can we tell the market has turned? Recently, that's what's been on my mind anyway. Recently, we have seen Bitcoin break through significant resistance levels and out of its bearish range, as seen on this chart. So when it broke through 31.5, the level we were talking about last week. Now, is this a lasting trend, or is this just because Bitcoin dominance is also going up at the expense of altcoins? And in reality, is this really no new money coming into the system? We're just rearranging the furniture. One metric that we will be watching is the total market cap of crypto. This is a really interesting chart because it looks so similar to the Bitcoin chart. It is also in an uptrend, but it has not broken through the resistance and its bearish range that it's been in. So this is just kind of pointing this out, kind of the interesting chart of the week to see long term, what are we looking at?
Yeah, I mean, it's super interesting to see what's going on. I think we could be I'd say we're in a bull market, but it doesn't necessarily mean that we don't go back down from here. I just mean that we won't make new lows on Bitcoin. Altcoins could keep making new lows for the rest of the year, to be honest. I think if you look at many of the major alts, including Ethereum, for example, in this most recent rally, it hasn't broken its all-time high for the year. It's still sitting several $100s below that high of the year. And if you look at Matic...
So lower highs, you're talking about lower highs.
They're lower highs on these alts right now. Matic or Polygon, that we'll talk about later on in the show, they also are sitting at almost, I think, a third of their all-time high for the year. So they're just making lower highs for the year, and so I do think that alts could continue to make lower lows heading into December and into the new year. And so I think, especially as we talk about the FOMC, if we see something in December, and I do still think there's a possibility of a rate hike in December, then we could see some more pain in the market overall, even though it might not be new lows for Bitcoin.
Yeah, I hesitate to make any predictions. It tends to go the opposite way. But this will be an interesting chart to watch and just seeing if the market cap can grow. One other kind of noticed was meme coins kind of kicking off, like Pepe and Floki. And I always kind of remember that the meme coins happen at the end of a cycle. And maybe this is like a cycle within a cycle, and kind of at the end of it with these meme coins popping off a little bit.
That was, I wouldn't say this is like the end of a cycle, because if you look at July was when meme coins were making millions. Like, people were making a lot of money on meme coins. Meme coins were all anyone was talking about. So I would say this is not really the same. They're always the last ones to pump in a cycle. But that's on any uptrend either way. They will be the last ones to go up because people will cycle money from Bitcoin trades that they make money on into smaller alts as they wait for them to potentially pop off a little bit. So I think it's not necessarily the end of a cycle, although it could be. I don't see that as the most likely outcome.
Well, moving on, kind of what's going on with the market. The crypto option market is booming. The notional open interest on the dollar value locked in active Bitcoin and Ether options on the leading exchange Deribit, which controls 90% of the global crypto options activity, has risen to over 20 billion. And this tally parallels peak registered in November 2021 when Bitcoin was trading over 60,000 or 90% higher than the market rate right now, which is around 34. This is a quote from Luke Strigers, Chief Commercial Officer at Deribit. The milestone has been achieved with nearly double the number of outstanding contracts, a clear indicator of a broader market growth and the escalating interest in options amongst our clients.
I know one NFT project that's run by Raoul Paul from Goldman Sachs and Real Vision, who they've got a ton of options contract open on Deribit as part of their season 2, the Real Vision Collective. I've definitely seen more people be willing to play the options game rather than the margin game. Also because the options game is a little bit more open to anybody in terms of
if you're a bear or a bull.
Yeah.
Because it doesn't say, it says there's a lot of action, but it doesn't necessarily comment on what it's expecting.
Yeah, and you're also, your risk is lower in terms of there's less leverage. Like, you can still play either side of the market, but there's lower leverage, there's lower risk overall. And so I would say that there's a lot of good possibilities with the options market, and I'm not surprised that it is doing as well right now. I would say that this is, I wouldn't say expected, but is a sign of a maturing market.
Now, speaking of a sign of a maturing market, a lot of people are looking forward to a spot Bitcoin ETF. This is one of the major narratives in terms of looking for when the bull market's going to kick them. We had a CFTC commissioner come out with some comments, some bullish comments, saying that the market is ready for a spot Bitcoin ETF. Summer Mersinger said on CoinDesk TV that there is real institutional interest in crypto investment vehicles. He mentioned that the market is ready for these products to be available. And these all came after a very volatile Monday, Tuesday, dominated by speculation surrounding the imminent BlackRock ETF. I remember last Monday and Tuesday, the market was really swinging up and down a little bit.
Yeah, I definitely think there's institutional interest, and I would say that there's interest for spot products, not futures products. We've seen that with the adoption of the ETH futures ETFs so far that have been pretty lackluster at best. I would say that the interest is really for spot products, and that the fact that this commissioner says it is not surprising. They probably have seen it based on the futures interests and just the lack thereof for ETH. I know from some of my institutional contact that is the case, that they're very interested in ETH spot products and Bitcoin spot products, but not their futures equivalent. So
I have a question for you, especially being up there in Canada and talking about institutional investors. I mean, Canada has a spot Bitcoin ETF.
Yes.
And it has not been, it hasn't seen like some huge growth. But there's this speculation that once BlackRock, US, I mean, maybe it's just the sales have connected with BlackRock and all their financial
100%.
advisors. But I thought that was an interesting argument that, like, look, there's already one. It's not like it's growing hand over fist.
No, but it's not from very, I'd say, mainstream brands. So it's not being offered by our banks, who, compared to the US, are a pretty main driver of investment in Canada, in terms of you're more likely to go to your bank for investment advice rather than a broker or a financial advisor in Canada. And so the banks aren't offering these kind of ETFs in Canada, and the people that are fairly small. They only really offer Bitcoin ETFs, or not very, they offer a limited number of other ones, and so they're not very well advertised. I didn't even realize that there were some in Canada until about 6 months ago when I started doing some digging, and most of them are fractional spot ETFs. It's not the same. And I would definitely say that for Canada, you'd want something big name so that you can go and get it, and it's a little bit more well advertised, and there's more assets under management with BlackRock or Fidelity. That be credit to Eric Balkunas for putting this up on Twitter and digging this up, but after BlackRock filed their updated amendment to their ETF application with the SEC, there was a filing that said it planned to buy Bitcoin as a seed funding round in the month of October, and there wasn't an exact date, but it did say that it would be this month or this past. So could BlackRock buying be what kind of happened and pumped Uptober? If you look at the chart, I would stipulate that potentially, yeah. We did get the hype about their potential approval a week ago on the 23rd, last Monday, and who knows, maybe that was the day they were about. That was a 10% day for Bitcoin. We had a 4.5% day or 5% day on the 16th. So maybe they bought every Monday, the last 2 Mondays, because it would definitely look like those were our big volume days. And big volume, I mean, it would be a combination, I think, of news, hype, and a whole bunch of other things. But the volume on both the 23rd and the 24th would suggest there was a lot of buying and selling those days. And I would
I was speculating more kind of overreaction to, we had, there's just this excitement around the ETF from BlackRock. And then there was this idea that, okay, in the new filing, it actually shows that they did buy with this seed funding. So there's actual buys, but there was also this DTCC list and then delisting and then relisting again that the market seemed to get really excited about. But then it came out that it was on there since August. So it wasn't really new information. So maybe it is actual purchases that started the rally and not, this hype idea.
I mean, I think people will find reasons to be bullish or bearish no matter what. And yeah, the DTC news kind of came out that day, but at that point, I mean, we'd found it the day before or even 2 days before, and we hadn't really seen a jump in buying volume. So something triggered the start of that buying volume, and that very easily could have been BlackRock. And then people were like, oh, why is it going green? Why is it green? Oh, there's this news that came, like people found this a couple days ago about the DTCC. That's why everyone's buying. And then that becomes the reason for the overhype. So it's, who knows? I don't think we'll ever find out when exactly they did do. I assume they were trying to do their buying below 30K or right around that 30K mark. And so I would suggest there's a couple of ways that would only make sense based on volume and the green candles that we saw. So
yeah, that was an epic green candle.
Absolutely. That being said, there's also been this video of Gary Gensler that's from when he was an MIT professor. Have you seen this?
Bitcoin futures and I think Ethereum futures and so forth will exist, and Bitcoin ETFs have not. And that feels a little inconsistent to me. As an observer, and I'm now in academia, but it feels a little inconsistent. Even though the laws aren't exactly the same, they're quite similar.
Yeah, I mean, he's basically using the argument. He's the MIT professor, and he's using this argument about the observable inconsistency of a futures Bitcoin ETF being approved, but not the spot ETF. So it's really funny to hear him argue that, and also now that he's the SEC commissioner, defend against that.
Yeah, it's super, super odd to hear his comments in the video that just play.
The irony is, but I mean, it just goes to show once you're in a political position, even though the SEC is not political, I guess it's just a regulatory. You can't necessarily say what you like. You truly kind of your hands are tied a little bit.
Yeah, that's it. Or it just shows his inconsistency. He's been pretty inconsistent as a SEC commissioner in terms of how he approaches. It just is maybe another sign of that inconsistency from Gary Gensler. One thing that isn't inconsistent is our episodes. You'll find one every single week, and if you enjoy the content, please consider liking and subscribing, because it really helps the YouTube algorithm and gives us so we appreciate all of you.
And it gives me a reason to come up with a new meme every week, which I've been enjoying doing. Whether I'm good at it or not, I don't know, but it's fun to do.
Oh, that's it.
Anyway, let's get into the end of October coming. Don't be scared. But we have Jerome Powell no first. Last week we had PCE come in expected. GDP came in over expectations, 4.9 compared to 4.7, which was expected. This is all gearing up for, are we going to get rate cuts, rate hikes, staying the same? It's 98% chance no change, 2% possibly a cut. I mean, it's just nothing unexpected I don't think is going to happen. The market may move because of comments and how they're interpreted, and then it's just kind of looking forward. Are we going to see steady as we go or rate hikes? It seems more like, are we going to keep it the same or are we going to go higher? Cuts aren't really expected in the midterm.
No, cuts aren't expected. I wouldn't say until at least March of next year. I would say even June, looking at expectations. And even then, I would say mild cuts at best. PCE coming in is, I mean, it's good and bad. PCE still doesn't really give them the all means that we're hitting pace in terms of where we expected things to be as the market. If I just double checking my numbers, but yeah, PCE came in at 0.4. No, PCE came out at 0.4, and that was about expectations, and it matched last month, and core PCE came in at 0.3, which was a hike from the last month. So, but year over year, PCE is still 3.4%. Core PCE is 3.7. For PCE, that's steady year over year compared to last month. For the core, it's down by 1, but had a big month in terms of growth. So it's not looking particularly deflationary quite. And I mean, I think that shows in the start. You'll see this is expectations for November, with almost everybody just expecting rates to stay. I think the other interesting things that we saw is that personal income grew less than expected, but personal spending grew quite a bit more than expected. So we're
more debt,
and that's not great. Although consumption is up for October, so super kind of interesting and mixed kind of indicators here. So,
well, speaking of just like personal debt, I mean, that's one of the issues with these higher rates and whether they can maintain them even if inflation gets under control or not. Is just the U.S. debt is so high, and as a percentage of GDP has the burden of paying that, of rolling that debt with these new interest rates, it's just getting heavier and heavier.
Yeah, that being said, one thing that's crazy interesting is that pending home sales are up quite a bit. They're up at 1.1%, whereas last month they were down 7.1%, and expectations were that they were going to be down 1.5%. So that's some pretty interesting numbers in terms of people are taking on more debt. People are buying and at a much greater rate than expected. Something to and considering that although given the fact that personal spending is still so high, that might be a reason to keep it higher. That being said, looking at December, there's a 24% chance that we see an increase, 74.5% chance that it stays steady, and a 1% chance we see it. I lean a little bit towards the 24. We've been hearing they're going to be careful, and so maybe they do stay steady. I know the Bank of Canada just stayed steady on their rates, but haven't ruled out another rate. And if we look even in January, some are kind of predicting that maybe we don't see the last rate hike in December, but we do see it in January, with 34% of participants expecting a rate by January. So,
but those numbers are fairly low, and it looks like kind of after January, that's when the expectations ease on any more, kind of a couple, 2-3 more months where they may do it.
I would say up until March. There's expectations up until March. If you look, it's about 29-30% expectations rate hike. We're still, I'd say that's still a good number, but by May is when the expectations really are a bit, with only 44% expecting rates to be at the same level, and only 16% expecting them to be higher. So we're seeing there's a much greater favoring, about 37% expecting a cut by that point. So
for cuts or eventual pivot.
Yeah.
Well, one of them besides the Federal Reserve meeting is later in the week we also have numbers coming out. Everyone kind of watching this one to see if it eventually breaks. The expectation change. So this could really break either way in terms of affecting the market if it comes below or above expectations.
Kind of watching to see what that does. I'll be very intrigued to see whether or not we in terms start seeing some breaking in the market. I have kind of through finds real hard data that we could see expectations jump in terms of unemployment, but
in terms of it going up, you mean?
Yeah. People are expecting, I've heard expectations of it potentially hitting that this Friday. So, and if that actually.
All right. Well, let's move. Still kind of related to the government a little bit. We have Kraken, major exchange that's based in the States. They are going to share user data with the IRS. Now, crypto exchange Kraken is following a court order, and the data concerns U.S. users with transactions exceeding $20,000 between the years 2016 and 2020. I think a lot of people were not reporting. But anyway, this is a battle that began back in 2021 between the IRS and Kraken, when a U.S. federal court authorized the tax agency to serve a John Doe summons on the crypto exchange, kind of like a broad summons of just everybody with transactions over this total. Kraken is not the only crypto firm sharing user information with the IRS. In 2018, Coinbase shared details of around 13,000 users. And in 2021, the IRS also issued similar summonses to crypto exchange Polynex and stablecoin users. So, and then I think it was last year, didn't they get a bunch of new tax agents over at the IRS? They got some more funding and got a bunch of new agents. So careful out there.
Yeah, I met an agent of Smile at Permissionless. It was super interesting.
Oh, what was that? How?
Kind of interesting to see their interest and the fact that they were there. Kind of had a good conversation. But yeah.
He was there as a representative of the government?
Yeah, she was there as a representative of the IRS. They're learning. So the IRS is staying on top of crypto. Let's just say that. Maybe they're not issuing the great taxes, but they are on top of it.
I mean, it's an open ledger. It seems like they shouldn't have an issue once they get it figured out.
Yeah, well, who knows? That being said, there's been some drama this week around the Wall Street Journal and Elizabeth Warren's letter to the White House regarding crypto funding of terrorism. So that letter, which we reported on last week, which had 100 signatures from Senate members, was citing $93 million in crypto donations to Hamas, which had come from an article in the Wall Street Journal. It was her own. And then that was then disproven by chain analysis and also discredited by the original source, saying that, no, you misinterpret. For the longest time, the Wall Street Journal was unwilling to correct their mistake, but they finally have, and partially issued a correction on this, with the extent of the funding not actually being $93 million, but approximately $450,000 on the high end.
That's a big difference.
That's a massive difference.
That's the kind of gains. The difference between that is the kind of gains I'm looking for.
It took them forever to retract it. They actually even said that their source didn't know how to interpret the positioning of the Wall Street Journal, and the fact that it was the only citation in Elizabeth Warren's letter is just proof that we need more crypto reporting and decentralized reporting out there so that you can actually get the real facts. That's why we've got Decentralized News. There's Blockworks, Bankless, and tons of other news organizations out there trying to provide you with the most recent and correct information.
It hasn't slowed down Elizabeth Warren, though. She hasn't commented on it or apologized or taken, done any kind of stepping with this. It's just kind of steady as she goes with her crypto army. She'll find something. She'll find another source. I mean, they can spin. Politicians are great at spinning any fact the way. So that's what they're built to do in a lot of ways. It's like the end, you know what I mean? It's like, we need to crypto.
Any money going to terrorists via crypto is...
Yeah, and sure, there's a lot of different ways to give money to crypto. We're not U.S. dollars, you know what I mean? Just because 5,000 of it ended up in terrorist hands or 5 billion,
Exactly.
Yeah. Anyway, on a little bit more positive news and maybe a sign of the bottom of the pit. As you recall, it was Terra and FTX that were kind of the big, huge story sent us into the deep hibernating winter. And BlockFi has emerged from bankruptcy less than a year after its FTX collapse. So BlockFi announced Tuesday that it's emerging from bankruptcy, said most wallet customers are able to withdraw assets and therefore can submit withdrawal requests. In a quote from the announcement, it also stated, quote, further updates on timing for the initial distribution will be sent in the coming months. We're aiming to begin initial distributions by early 2024, so in time for the next bull run. Any subsequent distributions will be dependent on many factors, including, most notably, any recoveries we can get from FTX and its...
Well, that's good. We're seeing returns to customers, and we're not seeing the SEC take a huge chunk out of that, so that'll always be a good thing. It also shows that BlockFi, it was one of those things that collapsed not necessarily under its own volition, but because of the malice and malpractice of FTX.
Well, and we're still seeing that case too.
He had the wool pulled over everyone's eyes and does not believe that what he did with Alameda. As he continues to go through his trial, I'm sure we'll get more interesting statements like that.
I can tell you, I remember BlockFi distinctly because at that time, I remember that was the first credit card I got where like kind of my monthly spending, I was getting rewards in Bitcoin. I felt like such a boss. I would pull that card out and feel so awesome. And I was just doing my regular, monthly expenses. I was just trying to do it on this BlockFi to get Bitcoin, return. I had to see it go. I mean, I was so proud of it when I first got it, and then just to see it be a part of, winning.
Well,
anyway.
That being said, something that isn't broken and has gone live, Paul contract. So POL, the new token for Polygon, they have gone live with its contract on Ethereum mainnet as part of Polygon 2.0. They've enabled Matic holders to migrate their assets to the new Paul token as of October 26th, so 4 days ago. And they're saying that Paul will underpin its whole new revamped staking layer for validators, as well as a whole bunch of, including their ZK EVM and layer 2 rollup, their proof of stake blockchain, and their long-standing Ethereum sidechain, as well as Supernets, and their new Maiden ZK Stark. So whole lots of things going on at Polygon, and some a pretty uneventful launch of their new contract.
You were mentioning that you're going to have 2-3 years going to be a slow sunset of the Matic token, but yeah, it seemed to happen quickly, but also slowly at the same time. They're rolling it out quickly, but there would be plenty of time to get it all figured out. I mean, I don't know anyone who has Pole token, but sure enough, it's listed there on CoinMarketCap.
It's out there, and I'm sure that probably in the coming weeks and months, we'll see more and more people move over there. I think it's just a matter of time, and they made this announcement with very little fanfare, so I think that this was probably something that, unless you were paying super close attention to and you wanted to be the first one to do it, you weren't necessarily watching this announcement. But that being said, thank you guys for listening to Decentralized News, and please consider subscribing to catch the episodes as soon as they drop. We aim to provide unfiltered content that will help the space grow and provide you with truthful, non-sensational information. This is not financial advice, and we are not financial advisors. We present this show for entertainment and educational purposes only, and we want to thank you for your support and to remind you to stay tuned for our next episode.